Welcome to the Deep Dive. Today we're digging into some really interesting material you sent over. It's a comparison chart, plus some text and visuals looking at XRP, Metal, and Ethereum. And our mission really is to unpack what this specific source sees as important, especially around DeFi and, well, compliance features. That seems key here.
It really does. The main thing we're looking at is this compliance comparison chart, XRP and Metal and Ethereum. It's from someone called Mr. Crypto 2328, dated June 6th, 2025. And yeah, it sets up a direct comparison, making some pretty bold claims about where each one stands, especially if you're looking at regulation and DeFi.
Okay, so let's break down how the source makes its case. It goes point by point, right? Direct comparisons. We should probably just walk through what this document says about each one.
Exactly. Let's do that. So first up, the source looks at smart contracts. It states XRP has no native ones. Ethereum, yes. Solidity EVM, and Metal, yes. WESM subnets. And the text with it, it frames this by saying Metal uses modern WASM and these custom subnets, which it contrasts with XRP's, lack of native contracts, and it calls Ethereum's EVM costly. So right off the bat, the source is kind of positioning Metal's approach as maybe more modern or flexible. That's its view.
Got it. So that underlying text, smart contracts, is presented as a key difference. How does it then compare them on actual DeFi stuff, lending protocols, for instance?
Lending. Okay, the chart says XRP has none. Ethereum, yes, Ankov, Compound. But Metal is listed as built-in and compliant. And the text really emphasizes this from the source's perspective, of course. It says Metal's lending is built-in and compliant, while XRP has none. And importantly, the source calls Ethereum's protocols unregulated.
Unregulated, right.
So this seems to be a core theme the source is building, this idea of integrated compliance.
Yeah, that definitely seems to pop up again with DXs, the decentralized exchanges.
Yes.
The source lists XRP as basic, low use, Ethereum, yes, Uniswap, etc., and Metal, compliant, integrated.
Correct. And again, the summary text backs this up. It argues Metal's DX is compliant and integrated, contrasting that with what it calls XRP's basic offering and Ethereum's need for third-party solutions. You can kind of see the pattern emerging in how the source presents things, right? It seems to value solutions that are built in and designed with compliance upfront.
And nowhere is that clearer, I think, than on the KYC, AML, BSA compliance point.
Sure.
The chart here is, blunt, XRP, not built in. Ethereum, mostly ignored. Metal, core to system.
Yeah, this is where the source draws a really sharp line. The summary text, based on this material, it's pretty direct. Metal's compliance approach is core, fundamental to its infrastructure, while it presents compliance as, missing or ignored on XRP and Ethereum, and we even saw in one of those other images you shared, it explicitly says Metal blockchain is built with BSA compliance. So for anyone thinking about regulated finance, the source is clearly signaling this as a major architectural difference.
That focus on built-in makes sense when you look at what the source says about fiat on and off ramps too. Chart lists XRP as limited. Ethereum via third parties, and Metal. Integrated, Metal Pay.
Yep, the source points to Metal's integration through Metal Pay as a key advantage, contrasting it with limited options or needing third parties for the others. It ties back to that integrated ecosystem idea the source seems keen on.
Okay, shifting gears just a bit, but still important. Performance. Speed and fees. The chart says XRP is fast, cheap. Ethereum, slower gas fees. Metal, instant, no gas fees.
And the summary text really highlights this claim from the source. Metal, instant, zero gas fees. XRP, fast, but maybe not instant, zero fees. And Ethereum, slower, costly gas fees, according to the source anyway. So that covers the kind of operational efficiency angle as this document sees it.
And bringing it back to adoption, especially maybe institutional adoption. Banking partnerships. The source states XRP has few pilots. Ethereum, some via third parties. And Metal is designed for banks.
This is another place the source seems to connect the tech design straight to the intended market. It positions Metal as specifically designed for banks and contrasts that with XRP's few pilots and Ethereum needing third-party workarounds. Again, that's the source's narrative.
And the big one that kind of wraps a lot of this together is the line built with regulation. Chart's super simple here. XRP, no. Ethereum, no. Metal, yes.
This is presented as a fundamental fork in the road by the source. The summary text really drives this home in the source's view. Metal is compliance first by design, whereas it claims XRP and Ethereum are not. And this is framed as the root cause for many of the other differences we've just talked about.
It really feels like the source is building a specific story here based on these points. It even has that line item, narrative versus reality.
It does, yeah. The chart calls XRP big promises, Ethereum open and risky, and Metal Real tech, real rules. And the source's wrap-up thought on this is basically, Metal delivers the tech and rules now, while XRP and Ethereum, again, in the source's view, were either chasing promises or dealing with risk because of how they were built.
So when you look at the bottom line provided in the source material, it says Metal blockchain, using the symbols Metal and 6PR, is purpose-built for regulated DeFi and institutional adoption. And the source makes a pretty strong claim, which you might be waiting for in XRP or ETH. Well, according to this material, it says it already exists on Metal.
That conclusion definitely seems supported by the specific comparisons the source chose to make and how it described the features. And those other visuals we had, they provide some extra context specifically about Metal blockchain, seeming to back up some of these claims, from the source's angle.
Right, like defining Metal blockchain itself.
Yeah.
That image describes it as a layer 0 solution, doesn't it?
It does, and its stated purpose in that visual ties right back into the main argument, right? Designed for financial institutions and fintechs. The image highlights things like BSA compliance, digital identity, private subnet architecture. These are presented as the tools for creating secure, customized financial products.
Okay. So the source is showing you how layer 0 private subnets, built-in BSA compliance, it gets to those claims like designed for banks and built with regulation.
Yeah.
It's connecting the tech architecture directly to the compliance in the target market in its analysis. It also lists some real-world connections in that image, right?
It does, yeah. It lists vendors and integrations, Clover, Temenos, Fiserv, Jack Henry as a VIP member, and banking partners and program members. Directions Credit Union, say the MDDC Credit Union Association, Vibrant Ameritrust Credit Union. So according to the source, these details are probably there to support the claim that Metal is actually designed for and working with the financial industry.
It's really interesting how the source uses these specific points, focusing so much on built-in compliance, architecture, to build its case. Its conclusion that Metal is purpose-built for regulated finance. It's not just listing features, it's making an argument about why these features matter for a certain type of adoption it claims is missing elsewhere.
Absolutely. The document is very selective or deliberate in its comparison points. It seems to be arguing that for certain high-stakes use cases like institutional finance with heavy compliance needs, you need a fundamentally different design approach, different from, say, more open, general-purpose blockchains or ones that didn't bake regulation in from day one. And it positions Metal as representing that compliance-first design philosophy.
It definitely makes you think about the different ways these platforms are built. Is it easier to build compliance in from the start or try to bolt it on later?
That's really the core question the source leaves you with, I think. For the future of regulated finance, institutional DeFi, according to this document's perspective, does a platform built explicitly with regulation and institutional needs in mind offer a fundamentally different path compared to, adapting existing more open systems? That's what the source seems to suggest.
That's a really interesting thought to chew on based on the picture this particular source paints for you. Thanks again for sending this material our way for this deep dive. It's given us a lot to unpack.